Welcome to a chat with AVID. It's David Harple and Jack Arnold. Good to see you, Jack.
Good to see you, Dave.
We've had a lot of conversations with not just clients, but really a lot of people lately on the election. And this is something that, we go through this every 4 years, but I feel like anytime it comes up, people really want to know, what do I do? What are you guys doing? Like, should I be concerned about the election? And this isn't like a political discussion. It's more of, what happens. So we figured we'd go ahead and just do a quick little webinar, if you will, a chat to shed some lights on our experience through it and what we think about it. And
Okay.
so I guess the first question is, when somebody asks you, Jack, so what do you think about the upcoming election and the markets? Like, what's going to happen?
Well, you know what I'm going to say. Like, it doesn't matter. Like, if it does matter, it's hard to tease out what, like, the cause and effect is. So if you say, well, the president matters, the second effect is, well, in what way? Like, is it good or bad for the stock market? And then, like, depending on who your guy is, will affect your answer. So if you're voting for this guy, you think the other guy's a moron, and if he gets elected, well, that's the end of everything. But of course, the opposite is true. Everybody who's voting for the other guy thinks the other guy is a moron, and if he gets elected, it's the worst. And both people are participants in the market. So it's hard to say that, if you think, well, if this guy gets elected, then it's just total garbage, and I'm gonna sell all my stuff. Well, that would be bad. One, for your own investments, you just sell everything out. It would be bad. But if the other half also sells their stuff, that's bad for you. It's kind of like who blinks first type of thing. Like, if I don't sell my stuff and the other guy's, like, for example, if you think that you're the opposite, the other guy is an idiot, and then he wins. And then you're like, well, I won't sell all my stuff. And then all the other people think, he's the greatest. And they just put all of their money into stocks. Well, in a roundabout way, like, you benefit from that because you're still holding the stocks. And of course, the opposite would be true. Ultimately, though, I just don't think it just doesn't matter. Like I said, even if it does matter, the second order effect is what actually happens to the stock market, which is impossible. I think there's a million examples, but I could say coming into this year, if I told you we'll have the worst month for unemployment ever, we'll have the worst quarter of GDP ever, and the stock market will be at all-time highs, you would think I was a moron.
Oh,
That was
and
crazy.
there's a global pandemic too, and
Yes.
you're not allowed to leave your house for months at a time, and businesses are shut down, and essentially the normal world that we knew is halted.
Right. Globally, 200,000 people in America have died, millions or however many in the world have died. And for me to say, but stocks will be at all-time highs, I would think I was crazy. So if I just laid those facts out to you, you would say, I don't want to be in a market like that. That would be something that I would want to be part of, yet here we are. So, those things probably matter more. I think if you had asked somebody, unemployment, GDP, and how the real economy is doing make a big difference with the stock market. And that just hasn't been true. People will say, how is the stock market going up really globally when things just are so bad? And the answer is the cause and effect is difficult to tease out. A doesn't always lead to B. There's thousands, if not hundreds of thousands of variables that will affect it. And those variables are always interacting with each other, and sometimes they matter and sometimes they don't. And the biggest thing to keep in mind is there's lots of people with lots of different opinions participating in the market. And as much as you think your opinion is the best, the other person who thinks the opposite of you thinks theirs is the best. And that kind of fighting it out in the market gives you a price. And as much as you might know what you think, it's hard to know what the other person thinks. It's a long-winded way of saying it's hard to say. I don't think that it makes that big of a difference, but even if it did make a difference, the effect of what the difference would make is going to be very difficult to tease out. So I know you got some stuff to show too, so I'd love to see that.
Well, Yeah, I did do a little bit of research. So I'm going to show on the screen if I can pull up a couple of these little slides to run through. Over the years, this chart that's on here now goes from 1926 all the way until through 2019. Starting with Coolidge and Hoover on the left, we've had 10 rotating sides or president changes over this period of time. So the blue is represented by Democrats, red by Republicans. And you can see what it shows. If you invested $1 in 1926, today it'd be worth almost 10,000. The gist being, U.S. stock market, which is represented by the S&P 500 here. We talk about this all the time. The 5 largest companies in America are represented in the index. This just shows that over time, it's pretty much gone up. I do think it's interesting if you look at some of these little sections, like, and we could talk about this all day long, Nixon and Watergate, Ronald Reagan and inflation was at 18-20%. You had savings and loan crisis early in 1990 or so. The financial crisis, George Bush, but through all of that, if you kind of weathered through those storms, if you will, the U.S. stocks still were positive. So now we're at the end of the slide. Trump's approaching, a second term if he gets reelected. And so who knows? The bottom could fall out, I guess, a little bit. But my guess would be if you have money invested and it's longer term, we use that, I think, almost too frequently. But if you have money that's invested in portfolios and you have a need for it, knowing need in less than 5 years, it probably shouldn't be in there. If it's longer term money, 10, 15, 20 years, which I would imagine anybody on this call would fit that mold, more than likely, regardless of what happens in the short term, in the long term, things will do well.
Well, right. And I think a few points to make is, first off, I mean, being concerned about the state of affairs is one thing. Saying, there's just any number of things. It seems like we have 17 hurricanes coming, and it's just ridiculous how much it's like hit after hit. So being concerned about these things, and obviously the whole quarantine thing, and those are real things. Like, those are real things that are really bothering people. I mean, we know firsthand, being in the house, we're still kind of working from home. I think it's a little bit more choice now, but so being kind of cooped up and there's just been so much stuff going on. Having concerns about that and being somewhat anxious about those things are real feelings. There's nothing wrong with feeling that way. Changing your investments because of those things would be the thing that you'd want to try to avoid. If you're in the middle of the night, you can't breathe, it's sick to your stomach about your investments, well, let's talk through it. Like, there's no sense in I wouldn't say ignore it. If it's bothering you that much and you're that concerned, let's kind of work through things and see if it's something we do need to change. So feeling concerned about it is there's nothing wrong with that. The other thing is there are things that are in your control that make a difference to how your wealth will grow over time. The effect of the president is going to be like number 100 on the list. There's just not much you can do, any of us really, short of I can go vote. I can try to kind of influence my little circle for whatever that's worth. But outside of that, I could just kind of vote and just hope for the best. I'll cast my vote, and then whoever gets elected, it is what it is. The great thing about it is that we'll run this whole thing back in 4 years. We'll be doing this again, and we'll be having the same discussions about there will be some. First of all, who knows who's going to win? It's always 50-50. So who knows who's going to win? If Trump was to lose, let's say, and we had a new president in there, well, we're going to have who's the next person that's going to be running? No idea. I don't know who it's going to be. No clue. If Trump wins, well, next time he's at the end of his 2 terms, there'd be a totally new person. There's going to be 2 completely new people running in 4 years, and I have no clue who that would be. If you say that's Kamala Harris, well, not necessarily, because Paul Ryan was on the ticket last year, and he's completely out of politics. So the last, 2 elections ago. So who knows? These things just change so much. 4 years from now is a short 4 years. and things will change in that amount of time. So if your person doesn't win, and however you want to feel about that, it is what it is. The sun will come up tomorrow, and you just got to keep at it. And the things that you can control are, how much are you saving? Do you have enough? Do you have an estate plan? Do you have insurance in case something happens to you? All those kind of things that we always talk about, like the blocking and tackling of really kind of growing your wealth, which are boring but effective,
Right.
are the things that we want to be focused on. How are you saving enough? Do you have all your affairs in order? Do you have an estate plan? Do you have your insurance wrapped up? Are you kind of headed in your direction? Are you clear on the things that are important to you? What your values are? Are you working towards that? All of those things are so exponentially more important than who the heck ends up being the president for the next 4 years.
I totally agree with you. But have you got this one yet? The Democrats are in there. Stock market does better. Like there's always that side to the thing.
Oh,
so,
yeah.
You've heard that one, right? So
I hear it both ways. It depends on who you're talking to, obviously.
Yeah,
Some people
exactly.
say, well, if the Democrat wins, like that's great. If the other way around, yes. Of course.
Right. So I did another little fun fact challenge here. So what's the answer? Do you know? What side of the coin, blue versus red, actually performs better looking back? Any idea?
In the past, I've known that it was Democratic presidents actually have done better over time, which I think means nothing at all because there's such a small sample size. But that's how the kind of, I think, more or less the timing has ended up. But
Right.
I know in the past that's what it was.
Right. We don't have millions of people or millions of presidents to go through to say, oh, okay, this is really what.
Yeah, right. There's only so right.
Number. But, and I think you're right. I do think that there's maybe a slight advantage on the blue side. But this chart I thought was just kind of cool to look at the returns per term. Now, mind you, this is after the fact. So it's not that Ronald Reagan influenced the markets and this is what it did. But you can see throughout their term, the longest termed presidents, which we'll get to in a second, obviously more time in the market. Maybe you could even argue that they've had better returns. But if you throw this in today, Eisenhower during his presidency was about an 85% return. Trump's at 60.
So this is the first 45 months of their presidency?
Basically 45. And the only reason I didn't go to full 48, the full term, is because not everybody would have showed up. Nixon didn't actually make the full term, so he fell off. So I just wanted to show everybody's name in here. Okay. Again, like I said, we've had about 10 presidents going back to 56. And they've all done they've all done positive except George Bush. So if we go out even further, and this shows like the total length, this would argue that the blue side has done better. Clinton and Obama at 200 and 145 return on the S&P 500 over the 8-year term. Reagan at 95, George W. Bush. He and Nixon actually were the only two presidents going back to 56 that during their terms, the U.S. stock market was negative.
Right.
Which we don't have this slide on here, and I didn't go out there to find it. But even if you would have put $1 in when George W. was signed on and had your money in there today, you would have made money, 100%. So again, if you go past 8 years, 10 years, 15, 20 years, the likelihood of, let's say, losing money gets smaller and smaller and smaller. And this is just the stock market because,
also, a couple quick things. There's only 4 people, number one. There's only 4 observations. It's not enough to draw from. But the funny thing about it is that it's more like Clinton had the best, George W. Bush had the worst, and then Obama came off of George W. Bush. It's more just like an ebb and flow of an up, a down, and an up, and unfortunate timing. I just don't, like I said, it's hard to tease out cause and effect. Yeah. How can you tease out cause and effect when there's only 4 observations on here?
Right.
It's just impossible to do.
Well, and I think too, like I remember looking at this, it makes me think back to when Obama was coming in, and we were already in a financial crisis. That was really the end of the Bush era. That started in 2008, so before Obama was technically moving forward. And the census was if Obama got elected, he was going to be bad for corporate America. I don't know if you remember that, but it was.
Oh yeah.
It was not positive. Like U.S. stocks are going to do great. They're going to probably do even worse. And when he got elected and then into like the first 3 months of '09, I mean, really, that's when the market just fall apart. I mean, it went down another 20%. And if you remember, I know we've talked about this before. I mean, we couldn't get people to buy 8% tax-free bonds.
Yeah, right.
So to think that they were going to invest in the market was crazy. However, those are those type of emotional challenges that we have because investing is counterintuitive. That was like a phenomenal opportunity to buy U.S. stocks.
Right.
Right. So not to say that if whether Clinton gets reelected or Biden wins, the market's going to automatically go down or up, or that it's a great buying opportunity. The point being is we just don't know. We don't know.
Right. And again, it's the cause and effect is impossible to tease out. So it's hard to say. Like you said, almost stereotypically, you would say, Democratic president is going to be bad for business. That's like the A equals B equation of who's the president. And just based on this anyways, that's just the stereotype is not played out the way that you would think that it would. I don't think that it makes a difference. Like I said, not that you can, or not any kind of difference that you can hang your hat on versus I should stay invested, I should not be invested. There's nothing that kind of teases it out that you can make a definitive conclusion on based on those things. The other thing is, we talk about this all the time is, we run, if we're managing money for somebody is, we manage a global portfolio. So not only is it hard to tease out what effect the president would have on the stock market here, how do you know what the effect they would have on the stock market in other regions? Who knows? Who knows?
Right.
There's just no way to know. I think the only thing you could really say is things that have done bad in the past, at some point the tide will turn and they'll do better. And things that are the darlings that everybody loves today, eventually things will turn around and they won't be. And that's kind of the typical ebb and flow of the market. It will eventually get too dear and people will say, it's too much, and they'll sell it or something, and then everything kind of fluctuates.
So we basically addressed that this is not the first time, and there's always this is different. It's always going to be different. It's always going to be something else. I like to equate it to the movies. The overall movie's the same, but there's different actors, and the plot might be a little bit different. But at the end of it, we, as a slide show, U.S. stocks will be fine. It'll go up. However, that doesn't alleviate people's concern. So if somebody were to say, well, what should I specifically do prior to the election, just in case, because I'm a little fearful of if so-and-so wins, reelected, doesn't matter. I'm just concerned about things going south. And you know what, quite frankly, I don't have enough time to make up for another if it's down for 4 or 5 years.
Well, one, I would say, first of all, you got to be clear about what your objective is, what you're trying to accomplish. If you are in kind of the accumulation phase of your life, so you're trying to build wealth over time, who is president for the next 4 years? In every sense of the word, is irrelevant. If you're going to be invested for the next 25 or 30 years, you're going to see multiple presidents coming through. And that's just there's no way to really know. It's irrelevant because you're just going to be adding the whole way through either way, whether it goes up or goes down. And kind of in a weird way, you'd rather it go down because then you're buying at lower prices. So, but I would be clear on what your objective is. If you're drawing on your funds, I think the one thing that I would be cognizant of is, one, am I aware of what I'm spending? So am I spending on the things that I need to be spending on? Do I have enough money so that I can meet my obligations? If there is some kind of hiccup, presidential induced or otherwise, how would that affect my investments? Can I adjust my spending if it came down to it? What could I really do, and kind of have a little bit of a plan just in case things were to go south for a year or two or something like that? If that was to happen, and even if it wasn't presidential induced, your guy doesn't win or something, even if it has nothing to do with it and it just goes down, do I have a little bit of a cushion kind of built in? Do I have a process built in to make sure that I don't run out or overdraw my account? I think it would be one thing. And then, like I said, be clear on what you're trying to accomplish. remind yourself of that. If you need to write it down, write it down. If you need to reach out to us and talk it through and go over the things that are important to you and make sure that you're on track, by all means, please do it. Obviously, we're definitely up to do it. Just reach out and let us know, and let's just work through it. I don't think that ultimately it's going to have a big effect one way or another. That doesn't mean the stock market is going to go up necessarily. It's just that I don't know that the president's going to make a huge difference, at least past the first week after the election or something.
Right. And I mean, I think you made one point in there that's good. Now, if you're pulling money out and you're living on that different scenario, but if you're not, maybe now's the time to start thinking of, can I put myself in a position that if things go down for whatever reason, I might have the ability to add more to the account. And we saw that this year, right?
Right.
March to mid-April or whatever, U.S. stocks got hammered. And we didn't know at the time. Who knows? We could have thought with COVID that it could have lasted another year and a half, 2 years. But lo and behold, 6 months later, here we are. Total opposite. I think S&P 500 is up. I don't know what it's doing today, but 6% or so year to date as of yesterday. So it might be a good opportunity moving forward. So, well, listen, we appreciate everybody tuning in. Hopefully you got some value out of this. As Jack mentioned, we're always open to talk more, to meet with you, to do Zooms, whatever is most comfortable.
I'm going to interrupt you real quick.
Yeah.
I'm not in jail, by the way. Like, I know it looks like I'm just in a blank white room. I moved, so I haven't got the setup right yet. It's just a big white room for now. I'm not like in a padded room like I'm going crazy.
We should have addressed the elephant earlier, man. I was wondering what happened. I thought maybe you got kidnapped or something.
Yeah. No, I'm good. I moved. I need to put some pictures up or something. Sorry. Anyways, go ahead.
You'll get there. You'll get there. So if you have any thoughts, or let us know. We're going to try to do these more often with topics that are relevant, that we're talking to other people about. So if something's of mine, zap us an email, and we'll try to put something together. Not promise that we'll have slides for everything, but these are enjoyable. Give us feedback, even if it's negative. Like, you guys are horrible and it's not fun to listen to you. And we'll try to figure something else out. So again, from all of us at AVID, I'm David Harpold. Jack, thanks for joining me. We hope to see you all soon. Stay healthy.
All right, see ya.